Good morning. Today is Thursday, December 20th, 2012. Here I give a wrap-up of the commodities complex for the day ahead of us and as it closed on Wednesday, December 19, 2012. Markets, especially bullions, traded in an extreme bearish close yesterday after the US fiscal cliff issues hang in the market. Optimism was there over the past few weeks that some resolution would be found by Barack Obama with the US Congress, but that seems elusive as of now. And even as the deadline nears 31st December, the markets are jittery that there could be this crisis looming on the market towards the year. Also, we have the impending holidays on account of Christmas and New Year, and hence long unwinding of positions have begun during the course of this week, as is reflected that the volumes are pretty thin in the market. First, we give a wrap-up of the bullions as it trades this morning. We had commented a couple of days back that gold on a break below $1685 could test 1660 and 1650 with a stop loss above 1710. Hit a low yesterday of 1663, currently trading at 1666, trades weak, expected to test the supports of 1660 to 1650 and then bounce back again. On the MCX exchange, close around the 30,800 mark, strong support is now seen at 30,500 to 600, where fresh buying could come in. Resistance is at 31,000 to 31,200. Silver, we had commented a couple of days back that a break below 31.9 could test 30.8 to 30.9. Hit a low yesterday of $31, currently trading at 31.06. Strong support and buying could come at around the 30.80 mark. On the MCX exchange, closed week at the 59,600 mark. Expected trading range initially is expected to be with a support of 59,000 and a resistance of 60,200. Both of them trade weak and follow the trends in the INR moves during the course of the day for tracking the bullion trades during the course of the day. Base metals ended weaker after copper reported huge pileups in inventory. For the 10th consecutive day, LME reported a pileup of inventory and it's trading at its weakest weakest over the past week, as also the LME inventories are at a high since February 2012. On the MCX, it broke the strong support of 443, hit a low of 438, closed at around the 438 to 439 mark. Support is now seen at the 436 level and resistance at 441 to 443. As data point out from the China and US markets, which seems a little bit tepid, the markets are expected to be choppy and in this range-bound manner, and no major upside is likely to be seen towards this year. Nickel has support of 954 and resistance of 977, hit a low of the 955 mark, closed at around the 967 to 68 mark, wait for fresh entry. Aluminium and zinc traded quite weak yesterday. Aluminium closed at around the 112.5 mark. Support is seen at 111.50 and resistance at that 114 mark. Zinc closed at around the 112.40. Support is seen at 111.5 and resistance at 113.80. Of all the base metals, lead seems most positive, closed at around the 127 mark. So long as 125 is not violated and a breach above 127.50 could test 128, 129 and 130. Overall, the market seems to be range-bound with less volumes. Traders are advised not to carry over heavy positions as the year-end draws to a close and do majority of trades to be intraday trades and wait for fresh entries. Please visit our website at www.akshayaship.com. One more point to note is the natural gas inventories are expected to come over today, expected to be in the region of a down of 75 BCF. This should hold prices higher. Crude is very, very positive after the increase in downside in inventory seen yesterday, trading at around the 89.50 mark. On the MCX, trades at around 49.50. Resistance are at 49.80 and 50.20, expected to be positive buy on dips with a support of 49.20. Have a safe trade. Thank you.